without giving away any intellectual secrets.
Don't give any secrets away.
Can you please walk us through the process of having a deal presented to Bakerson CPI and your underwriting process?
Yeah, the underwriting process for us, there's a few different ways we do it. There's the Bruce's napkin math, and it's a sniff test that I do that I will not share my secret formulas. But as people have told me that worked with that says that I don't know why it works, but it works. And so when I'm walking a property, I can ask them, what is your rent? What is your renovation? What is that? And then in moments have an idea, are we in the ballpark if this is a good asset or not? You know, there's because things you can look for is price per square foot, price per unit, rent per square foot, rent per unit. So those four metrics are always important. And then you compare those to the marketplace. And that's before underwriting, right? Because you're looking at, okay, their average rent is $1.50 per square foot, whereas everybody else is at $1.20. Is this really going to work? Is this going to sustain? Well, they're all very small units and they're new. Okay, well now we have a story we can look at. So that's one of the things to look at pre-underwriting. So in the underwriting itself, the thing to look for is to make sure that you know what you're getting into on the cost of repairs and the age of repairs, the CapEx, you know, all the things that come in for maintaining the unit. But you want to know, like, where's the ACs, when are the ACs last been serviced? How old are they? Because you got a building that's completely renovated and the air conditioners are all, you know, 20, 30 years old and there's 250 of them. Well, those aren't cheap to replace. And I don't know if people that aren't here know that Arizona gets very hot. We set a record this year of 144 days over 100 degrees. So if the air conditioner quits, it's a big deal, right? So, but as far as the underwriting goes, the best thing to know is to find a good underwriting software where you can plug in the numbers and you can put in the metrics you want. What is the return you want for the investors? How are the splits? How does that work? And it'll tell you whether or not it's a good deal. And there's a couple different ways to really dive down. I don't know how deep you want to go into that.
I'll just spend a couple minutes on it if you like, Bruce, please.
So one of the things that people use is a cap rate, the capitalization rate. So the cap rate right now, and right now you can just throw it out the window because we see C properties trading at a 4.25 actual and a 5 pro forma. So what I think is more important is what debt can you get? What is that cost for that debt? And then we're in a market where we're looking for yield. What is the monthly return to the investors and how much can they get and how secure is that? Because you can get 10-year financing, amortized over 30 years with Fannie and Freddie at sometimes sub 3% we've seen. It's insane how low the money cost is. So right now, in the underwriting, I think it's really important to look for yield to how you can take care of the investors because the market here will continue to creep up and we'll have ups and downs over the next 10 years. They'll have a pullback. I don't see a crash, but make sure that you're underwriting conservatively on your exit cap because the exit cap rate may not be 4.25 or 5 for a property in Phoenix. And what if it's 7? How protected are you? So when we underwrite, we stress test at 2 in a 10-year period, at least 2 points over the current cap rate as your exit. So if your income goes up and the cap rate is 2 points higher, you still need to take that to figure out what your NOI is or what your cap rate is based on your NOI. So your NOI goes up, let's say 30%, but you got to remember the cap rate might have gone up 2 points. So make sure you're covered on that when you're on your exit so you can show your investors that, hey, worst case scenario, here's where I think we will be. And that's how you project to the future on making sure that your investors are in fact cared for.